situation which we're in right now is not unprecedented. There have been instances when big nations have chosen to look inward. The Japanese did that in the late 1800s. The Americans have done it repeatedly, 1890s, 1930s. So what is going on right now, don't think is that unique. We have historical precedents to what happens to civilizations when they turn inward and what happens to the rest of the world when they turn inward. Classic example would be the US turning inward in the late 1890s when William McKinley was the president of the United States, and then also in the early 30s when Hoover was the president. In both times, whether it was Canada or the UK, they gravitated closer to each other. In both times, the incidence of turning inward was accompanied by financial and economic shocks in the US, which took the US in uncharted territory. In the case of the 1890s, growth was okay, but seeds of subsequent financial crises were sown. In the 1930s, of course, we know the Great Depression followed those cataclysmic efforts to raise a tariff mode, if you will. So what I'd like to do in the next 10, 12 minutes is to share with you some of the macroeconomic implications of where these tariffs are going to take us. Here we are, businesses, investors. We have to try to parse out some of the essence of how to defend our portfolios, how to defend our companies in these uncertain times. This kind of shift that we're seeing in US consumer confidence and inflation expectation is fairly unprecedented. Stuff like this doesn't really happen. As you can see in this chart, I go through the COVID period, and even then, the dip in consumer expectation was not as dramatic as we've had in the last couple of months. This is not just one survey. There's a host of surveys that show businesses and consumers are paralyzed by uncertainty. Goods that were bound from the United States are now turning around or don't really have a destination to go to. Take, for example, furniture importers in the US. You had placed a $10 million order of furniture. It was on its way. But now, when it reaches Long Beach, you are going to have to pay $12.5 million in tariff on that $10 million in imports. You're not going to do that. You'll probably cancel the order, take the earnest money that you had paid earlier as a sunk cost, and now what will happen to those furniture is anybody's question. But more importantly, American buyers who are going to buy furniture this summer will probably find empty floor space and shelves because those furniture are not going to come from China, and chances are they're not going to come from anywhere. Related to that, likely incidence of shortage is the likely increase in prices. Maybe it's a one-off, but it is coming without any question. And by the way, it's only coming in the US. The rest of the world, a totally opposite story. As the US faces an inflation shock, we will all have to deal with a disinflation shock because there'll be more supply in the rest of the world and there'll be less supply in the US. I think that the numbers here are just for illustrative purposes. The fact that Americans are expecting 7% inflation over the next 12 months doesn't mean we're going to have 7% inflation. The US is a wealthy economy. Most of the things Americans consume are services, and domestic consumption is also related to domestic production. There might be 100, 150 basis points upside to inflation. It's a problem nonetheless, but I think far bigger problem than the likelihood of prices picking up is the uncertainty around trade deals. Nobody knows where things will be 60, 90, 120 days from now. And where do we stand right now? We're in a bit of an impasse. There's this 90-day period where government after government are sending delegation to Washington, D.C. They're trying to negotiate with the U.S. We heard feedback from the Japanese overnight. We've been hearing the Indians are also feeling encouraged about some of the things that they're discussing with the U.S. And Donald Trump is never shy of saying that, 50, 60, 70 countries are showing up in the doorsteps of White House trying to strike deals. But that doesn't mean all tariffs are on pause. In the last few days, the US has made it very clear that a wide range of import restriction from China related to semiconductor and for the world as a whole with respect to electronics-related exports to the US are coming. Pharmaceutical, same story. Electronics is not just semiconductor-related, but a broader range of products. The goal to onshore manufacturing remains, and herein lies an important duality that we need to appreciate. On one hand, the US wants the rest of the world to negotiate with it and extract some concession, favor, tribute, whatever you put it, in exchange for some relief. But at the same time, for a wide range of things that Donald Trump wants to accomplish, you have to have the tariffs permanent. He wants to bring in jobs. How can you have that if there's negotiated reduction in tariff? The whole point of creating a tariff wall is that you can export into the US. If you want to sell in America, you have to build in America. Similarly, Donald Trump was a very large tax cut. How do you finance a tax cut if you don't have new sources of revenue? It has to come from tariffs. So my view, I hope I'm wrong in this view, but my view and my prediction is many countries who are going to Washington today will come back disappointed. They will not get the kind of tariff relief they were hoping, because without making the tariffs permanent, or at least creating a credible threat of the permanence of tariff, there are many of these goals of this administration cannot be accomplished. Now, the administration, when I say, is not a monolithic administration. There is a heterogeneity of opinion in there. You have Wall Streeters like Treasury Secretary Bessent or Commerce Secretary Lutnick on one hand of the spectrum. Maybe they're the ones who convinced Trump a few days ago that the bond market turmoil was becoming a bit scary, and then they probably asked him to sort of slow down some of the tariff-related move. But then you have the likes of Stephen Moran, who wrote a paper that is widely being read in the circles about weaponization of dollar, about going after countries which receive U.S. protection, and therefore they should offer U.S. favors in terms of taking a haircut on their treasury holding. All sorts of things are being talked about in the circle around Stephen Moran. And then you have Peter Navarro, who probably was the architect behind this historic reciprocal tariff calculation equation that we saw a couple of weeks ago. So there are protectionists, ultra-protectionists, and then some market-friendly people. I think the worse the market does, the further ascendance I think the market-friendly people will have in the administration. But if the market starts shrugging off some of the downsides coming from tariff, you will see the ultra-protectionists add more and more salvos. What kind of salvos are we talking about? So now the world is in three buckets. You've got allies. Singapore, I think, is in that bucket. Australia, New Zealand, even Turkey. I was surprised by that, but that's the way the US seems to be classifying these countries. And then in between, countries who want to graduate from being in between to the ally camp. India, Indonesia, European Union, Japan, Korea, Taiwan. Everybody thinks that they have deep security ties with the US, deep historical ties, and they can get the worst of the tariff conflagration out of them. And then you have clear-cut adversaries, China, Hong Kong, Cambodia, Vietnam. I think the likes of Vietnam, if they want any sort of relief from the US, would have to promise a proverbial divorce from China, which I think is absolutely impossible for a country like Cambodia or Vietnam. So based on that, let's consider a couple of scenarios. We call the first scenario TOTUS. Of course, it's a play on POTUS. Trade outside the United States. Note that there is a set of rules and regulations for world trade, world commerce, that used to be for the whole world, but the US has shown very clearly it doesn't really want a part of that. So now we will have to come up with rules and regulations for the rest of the world, and then maybe one set of rules for making in the US and selling in the US. So, and I would assign that as the highest probability in the near term, at least the next 2 years. Second one, unfortunately, is not a small probability scenario, fairly high one, where things get worse. Escalation on tariff and non-tariff measures. So if you want to get a deal from the US, you have to restrict your imports from China. You want to get a deal from the US, you have to restrict your exports to the US. If you want to get a deal from the US, you have to promise investing in the US. That sort of stuff will make countries have to almost decide whether they're in the US camp or China camp, and I think that's going to be very, very difficult. So that sort of thing also would entail weaponization of the US dollar, forcing countries that want to be close to the US to appreciate their currency, to take haircut on the US dollar holdings of assets. All sorts of things that we think are absolutely unthinkable, unfortunately, are also on the table. And by the way, that is not the worst case scenario. Let's put 5% to the worst case scenario, in which the US pushes China so hard that China basically feels that it is an existential threat now. See, we can talk about trade war and keep aside issues related to kinetic war only to some certain extent. Economic security matters so much, at one point it becomes national security issues. The US uses that argument a lot. They don't want to deal with Huawei because they think Huawei trading with the US is a national security issue. Well, the converse is also true. If the US starts making rest of the world start putting restrictions on China, China will be cornered. And at that point, we will start risking jumping from economic warfare to actual warfare. Finally, silver lining, possibly, a grand bargain. Trump is a deal maker. Maybe he wants a deal with China, and maybe he wants to find a way where she and him can come up on the Rose Garden and say they've struck a grand bargain. I'm not feeling particularly hopeful about that, but we can't rule that out, so I'll give that a 20% chance. It's a dramatically changing world, and friction like what we're seeing right now is not something that is just of Donald Trump's making. It was probably inevitable. As the rest of the world rises on a relative basis, US's importance becomes smaller. What you're seeing on this chart is IMF's projection of the global share of world GDP. So the US used to be 22, 23% of world GDP 50 years ago. It's heading towards sub 15%. China used to be basically nothing 50 years ago. It's heading toward almost 20% of global GDP by the end of this decade. India, which was also basically nothing 30, 40 years ago, is now heading toward becoming a consequential chunk of global GDP before this decade is over. When other powers rise, it's hard for the incumbent to tolerate that without some degree of friction, and some of that we're seeing. I think just about any US president would probably be pushing back. Donald Trump is doing it in his own unique way, nonetheless. Finally, I want to leave you with this chart. The world is not that small outside of the US. 96% of the world's population, 89% of global trade, 75% of global GDP in current dollars, 85% of global GDP in PPP terms is outside of the United States. So when I talk about the TOTA scenario, by the way, Timothy Wong, who's sitting in the back, helped me come up with that using Gen AI. The trade with the outside world scenario is substantial. It can be gainful. So maybe the silver lining is, if indeed the US abdicates its role to be the setter and enforcer of global rules of trade and commerce, maybe the Europeans, the Asians, the Middle Easterners, Africans come together and we create our own set of rules. It's a big world. We can prosper in that, and there's enough financial assets, real assets, and trade capability in that world to go about our own way and still make gainful existence, and perhaps also come up with ways to remain open to the US and deal with the US. Because remember, what we're doing right now looks very dark and grim, but this is not the permanent state of affairs. Americans historically have lurched from one end of the spectrum to the other end of the spectrum. They're flirting with protectionism now. Maybe 2-3 years from now, they don't. You gotta bide your time, but the time in between is not gonna be that disastrous in my view. It's a big world out there. We can make it happen. Thank you very much.